Welcome everybody. This is Sir Kuda of the Savannah Royal College. I hope I find you well. Today we want to look at Cambridge paper, that is May-June 2003 session, a continuation in our series of question number 1 to 10 on each paper, right? Let me just make mention of something. We have just received the news on Friday that Zimsec June 2019 results are out. So far we have managed to obtain our results and they are quite exciting. I can comfortably tell you that we have a 100% pass rate so far, with the lowest grade being a B amongst our accounting students. I just thought that it would be great to share this with you. Right, so without wasting much of our time, let's look at the questions that are contained in the paper. So we look at question number 1. The following information relates to a business for a period. Selling price per unit, we have 100. Variable cost per unit, 60. Total fixed cost, 90,000. Net profit, 15,000. How many units were sold in the period? Right, I'll show you two alternative ways of doing this. Right, the first one is centered on our understanding of CVP, where we know that in order for us to calculate units required to achieve target profit, we use the following formula. So we say units are required to achieve target profit. Right, for those of you who are familiar with this, we take our fixed costs, we add target profit, we divide all this by contribution per unit. So in this case, our fixed costs 90,000 and net profit is 15,000. So 90,000 plus 15,000 over contribution per unit. Remember, contribution per unit is selling price minus variable cost. So a selling price of 100 and variable cost of 60. So 100 minus 60. Then come up with our answer. Right, the answer is 2,625 units. Right, alternatively, one would say, how do I calculate profit? Profit under marginal costing, we say total contribution minus total fixed costs. Right, so the profit here in this case is 15,000. Right, to get my total contribution, currently what I know is the contribution per unit that I can calculate by saying 100 minus 60, then I multiply by the number of units. So we are going to denote that by an X, then minus our fixed costs amounting to 90,000. Right, so I will have to solve for X here, right? So it will become 15,000 equals to 100 minus 60, that's 40, which is 40x minus 90,000, right? Then we group like terms here, so it becomes 15,000 plus 90,000 is equals to 40x. Therefore, x is equals to 105,000 divided by 40. X will be equal to 2,625 units as well. So let's look at our answers. 2,625 units is found at letter D. So that's the answer that we are looking for. Right, let's progress. A customer paid a deposit in advance for goods to be supplied at a later date. So a customer is paid us in advance, but we have received the money, so we're going to debit the money, right? Or we're going to debit bank or cash and credit the customer's account, right? We are not going to credit any sale because sales have not yet been made, and we don't credit a prepayment either, right? So the correct answer is we debit cash because we've received money and we credit the customer's account, right? So that's the answer. Then we look at the next question. The next question, what are they saying? A trial balance is at 30 April 2003 before making end of year adjustments showed, right? Debits, we have trade debtors, trade receivables, provision for doubtful debts. Then at 30 April, it was decided to write off a bad debt of 800 and to make a provision for doubtful debts of 2% of trade debtors. During the year, an amount of 200 was received from a customer relating to a debt that was written off in the year ended 30 April 2002. What was the total bad and doubtful debts expense for the year ended 30 April? Right, so let's work it out. Right, so before anything else, I think we need to draw our provision for doubtful debts account. We start with that one. For doubtful debts, I'll just use initials there. So obviously we start with our balance brought down. Let's check it out. Balance brought down, that's 580. Right, so 580. Right, what are they saying? Okay. Right, they are saying the trade debtors amounts to 17,800, but it was decided to write off a bad debt of 800. So we know the double entry when bad debts are written off. You debit bad debts expense account and you have to credit your trade receivables or your debtors. So meaning to say we are deducting 800 from 17,800. So we end up with trade receivables of 17,000. And we are supposed to make a provision which is equal to 2% of that. So 2% of 17,000, that is 340, right? So 340 is the balance that is supposed to be in the provision for doubtful debts account. So we are going to compare it with the balance that is already in the doubtful debts account. If we can see very well, we have 580, now we have 340, there is a decrease. And it is pretty obvious that a decrease in provision for doubtful debts, we debit provision for doubtful debts and credit our income statement. So we come and put a debit, which is income, right, which is 580 minus the new balance of 340. So 580 minus 340, we get 240. Then we balance off the account. Balance carried down. Obviously we have 340. Right, we sum it up. 580, 580, and a balance brought down of 340. Right, but what are we required to do here? We are required to calculate the expense. Right, so what is the total bad and doubtful debts expense? So we are going to net them off, right? So we are going to say we have a bad debts of 800, right? Then there is a decrease in provision for doubtful debts, which is an income. I hope and believe everybody is comfortable with that, and we've just calculated that to be 240. And there is a recovery that was made during the year in respect of debts that were written off in the previous year, 200, which is also an income. So the net expense will be 800 minus the decrease minus the recovery that was made. So we end up with 360. So this is the amount that we are going to recognize as an expense in our income statement, and 360 is found at A. Right, moving on. The table shows information relating to a company's fixed assets. Then we have cost, which amounts to 10,500, that is on 1 January 2002, and accumulated depreciation on 1 January 2002, 4,900. Then purchases for the year ended 31 December 2002. Then we have disposals for the year ended 31 December 2002. Right, then depreciation is 25% per annum on the reducing balance basis. So what is the depreciation charge for the year? Right, so I'll use the net book value for simplicity purposes. Right, so we start with the balance BD, but this is more or less like an asset account at net book value. Right, so balance BD, I'll calculate my net book value that existed at the beginning of the period. So to get a net book value, I will have to say 10,500 minus 4,900. So 10,500 minus 4,900, I will get 5,600. Right, then additions, obviously additions will be made at cost. Right, so additions of 500, 2,500 I mean, right? Then we have a disposal, right? This disposal, we are not told whether it is a cost or it's a net book value, so we just make an assumption that it is a net book value at 700, right? Then we get our closing net book value, balance carried down. So 5,600 plus 2,500 minus 700, what we get? We get 7,400. And depreciation being charged on reducing balance basis, we take 25% of that, right? So times 25%, we get 1,850. This is the depreciation charge that we are looking for, and the correct alternative is at letter A. Right, then we move ahead. A business that purchases a shop incurs the following costs: purchase price of the shop, legal fees incurred to purchase the shop, cost of initial stock, cost of installing air condition. What is the amount to be capitalized as the cost of the shop? Right, this is fair and fine. Right, remember we want the capital expenditure, and we said capital expenditure is the amount or refers to amounts that are incurred in the acquisition of a non-current asset and bringing that asset to the business location and the condition for its intended use. Right, so obviously the purchase price of the shop is capital expenditure. Then the legal fees that are incurred, they are necessary costs. We cannot acquire this without incurring the legal costs. Then cost of initial stock, these are costs of a trading nature, so they are not supposed to be included in the cost of the shop, or they are not supposed to be capitalized. Right, then cost of installing air conditioning is also capital expenditure, so we are going to combine those three, right, in order to find our amount to be capitalized. So we say 680,000 plus 7,200 plus 47,300, right? So the total that we get is 734,500, right? So there is our answer. Then question number 6. Which of the following is the definition of a business as a going concern, right? A business as a going concern, I remember in my previous videos, I defined what going concern means. Going concern means that the business intends to continue into the foreseeable future and there is no intention to close the business or materially curtail the operations of a business, right? So that's what going concern is. So it's a matter of knowing your definition here. So we look at the options that were given there. Option number A, they are saying the assets owned by the business exceed its liabilities. No, that's not what we are looking for. The business has accumulated revenue reserves. That's rubbish. Then the business is currently liquid and able to pay its creditors. That's nonsense, right? Then the business will continue in operational existence for the foreseeable future. This is what conforms to the definition that we have just agreed on, right? Then we go to question number 7. A sole trader pays private expenses from the business bank account and records them as drawings. Which accounting principle is applied? Right, so the accounting principle that is being applied, remember that whenever we have a business, for accounting purposes, we are going to assume that there is separation between the business and the owner, despite the legal position. Remember, the legal position is that if we have a sole trader business, that business, in the eyes of the law, is not regarded as a separate legal entity, right? But for accounting purposes, we are going to assume that there is separation so that transactions of the owner are not going to be incorporated in the business, right? The business is a separate entity and the owner is a separate entity on his own. Therefore, the concept that we'll be applying there is known as the business entity, which separates the transactions for the owner and those of the business. We should not mix the two. So business entity concept is the concept that we'll be applying. Obviously, it can't be going concern. We have just defined going concern there. Matching concept, remember we said matching concept is all about events and transactions being recorded in the period to which they relate despite the actual movement of cash. And prudence concept is a concept which states that our profits should not be accounted for until they are realized and losses should be accounted for as soon as they are anticipated. So we can see from the above that the answer that we are looking for is right there, the business entity concept. Right, then let's look at question number 8. Which of the following would prevent a trial balance from balancing? We want an error that is reviewed by the preparation of a trial balance. A credit note from a supplier entered in the sales journal. For as long as it is entered in the sales journal, it means in the books of accounts, in their totality, it will have been treated as a sale. Therefore, that wouldn't affect the agreement of the trial balance. Then a discount allowed posted to the discounts received account, right? We would have, in fact, we will have to look at that more closely. Remember, discounts allowed is a debit. And if we post discounts allowed to discount received, it means we have posted it as a credit. So there is violation, right? So I'll hold on to that. I'll have to look at the other alternatives before I make a conclusion. But this one seems to be the answer that we're looking for. An invoice entered twice in the sales journal. For as long as it is entered twice in the sales journal, then it is going to be entered twice in the books of accounts, right? A refund to a customer wrongly posted to discount received, in fact, to discount allowed account, right? Remember, we were supposed to debit the customer and we are going to debit discount allowed again. So this one is not going to work out as our answer. So the answer that we are looking for is where discount allowed is posted as discount received, because we would have violated the double entry principles there. We were supposed to debit discount allowed, but we ended up crediting discount received. Right, then number 9. At 31 March 2003, a customer's bank statement shows that his bank account is overdrawn by 10,136. Right, I know an overdraft on a bank statement will be reflected as a debit. Right, then further information is as follows. Checks drawn, not presented, those are unpresented checks. Then checks paid in, not credited, that. Then bank interest charged, not in the cash book. So what is the correct bank balance to be shown in the customer's balance sheet? Right, what we need to know is that the amount to be reflected in the balance sheet is the balance per updated cash book. So I will know that if I just do the reconciliation, I'll get an updated balance per cash book. I'm not looking for an original balance, so I will not adjust for bank interest not in the cash book, because if I just do the reconciliations here, right, I will end up with an updated balance, right? So we are going to do that. So I will just use the space that is provided here, right? So we'll start with an overdraft. Per bank statement, which is 10,136. If I start with an overdraft as per bank statement, I will add my unpresented checks. Right, why am I adding them? 4998. I am adding them because the overdraft per cash book would have been greater because of this, because they are already reflected in the cash book balance. So I need to match those balances by adding them, right? Then I will deduct the bank lodgements, or else some would love to call them deposits not yet credited, which is 5896 there. Right, why am I deducting them? It's because the overdraft per cash book would have been reduced by these amounts. So I get my overdraft per cash book. Right, and this is the figure that will appear in the statement of financial position. So 10,136 plus 4,998 minus 5,896. So I get 9,238, and it's still an overdraft. So the correct answer is found at B. Right, I think I have explained why we are not including 181, because if we then take the effect of 181, it means we are going to get the original balance, the unreconciled balance. But when we are entering the amount for in the balance sheet, right, we are supposed to put the updated balance, and this is the updated balance, right? Then the final question for this session, the balance sheet, in fact, the balance on the sales ledger control account amounting to 43,000 had been entered in the trial balance as 34,000. The difference on the trial balance has been entered in a suspense account. Which journal entry is required to correct the error? Right, so looking at it, the control account is correct. There is 43,000, but we have made an error in the trial balance. So there is no correction that is required in the sales ledger control account. So we are only going to correct the amount that we have entered in the trial balance and eliminate the suspense. So to my mind, I will have to ask myself, what was the effect of this error? Or where is the suspense as a result of this error? Remember, sales ledger control account represents debtors or trade receivables. So the trade receivables are supposed to be 43,000, but they are entered as 34,000. So there was a shortage in our trial balance on the debit side because of this error. But we said the control account or the debtors amount is correct per the control account. So what we need to do is to eliminate the suspense on the debit side. So it would mean we have to credit our suspense account with the difference between those amounts, and the correct alternative or the correct answer that we're looking for is 9,000, where we credit our suspense and increase our debtors figure, right? So that's it for this session. So thank you. I think you find this helpful. Please like the video if it is useful on our channel. Thank you.